All right, guys. Thank you all for tuning in to this week's live presentation. It is December 7th at 4:30 p.m. EST, and we are ready to go. We hope everyone had a great holiday, got to spend some time with friends and family, and that you're all having at least a decent week in the market so far. Now, for those of you that are regular Shark viewers, welcome back. And for any new viewers, we hope you get something out of this and you continue to tune in. Now, we are aware that everyone has a lot going on this time of the year especially, so just know that we really appreciate you guys spending the next 45 minutes to an hour with us. Go ahead and do me a favor, type a Y in the chat if my audio is coming through all right. Awesome. Thank you, John. Thank you, Bob. Okay, so for those of you who are first timers, my name's Ty. I'm one of the guys here at Shark Indicators. I've been with the company for a couple of years now, and it's just been an awesome experience so far. We've been involved in the NinjaTrader ecosystem for over 5 years, and we developed some of the most capable trading tools in the industry. Now, that being said, you've got to put in the work to hit your mark. That goes for anything you do. So let's take a quick look at the risk disclosure. Take a minute and look this over, though I'm sure many of you are used to seeing it by now. Futures, foreign currency, and options trading contains substantial risk and is not for every investor. So as I said before, we don't sell any holy grail this or home run that. We just build powerful trading tools. And on top of documentation and weekly workshops, we like to show our audience what other NinjaTrader vendors and educators are doing with our software. So what we do for events like this is we bring in a variety of partners throughout the industry so you all get some exposure to different trading methods and personalities in conjunction with our tools. Now, each one of these presenters is successful in their own right, and each offers a unique trading style. So let's dive into today's topic, which is trading the meat of the move with Julie Wade. Now, just a bit intro for Julie. She's a corporate litigation paralegal, a native Houstonian, and she's been trading for about 5 years now. She's been developing trading algorithms using Bloodhound for the past 2 years, and she's a spectacular partner for showing you what our software is really capable of. Julie Wade concentrates on entering the markets using signals based on volatility, momentum, and volume levels, and she builds custom Bloodhound templates using these methodologies. So without any further ado, we're just going to get right into it. I'm going to go ahead and pass the screen and the mic over to Julie.
Hey guys, thank you so much, Ty. I appreciate that.
No problem, Julie. Great to have you here.
I'm glad that you can hear me, and give me 1 second to get something organized. Fantastic. Give me 1 second. Super. Super duper. Okay. Appreciate it. Welcome everyone to our presentation today. We're going to be talking about trading the meat of the move, which is the big fat middle part of a trend that we all want to find and trade. And I'll be talking about some techniques that I use for trending opportunities. 2 new Bloodhound templates that I've created that will help me find the meat of the move. And tomorrow I'm having an open house in the trade room where we'll use a new Blackbird strategy template that uses one of these new Bloodhound templates to time trade entries. Tomorrow is non-farm payrolls, so be sure and get your request in early for the open house. Just shoot us an email at support@jatotradingstrategies.com so you can be in the room at 7:30 sharp. So thank you so much, and let's get started with the presentation. A lot of you know that I had a legal background, 25 years. I sort of worked periodically, occasionally, part-time after that, but I haven't so much for the past, well, since this summer. I sort of retired. And I was definitely sort of shifted out of the law firm arena after the 2008 financial crisis. The firm I worked for did dissolve, and I was laid off during the financial crisis. And what do they say? When a door closes, look for another one. I do want to just mention an experience with you that I went through shortly after I was laid off that I haven't really talked to anyone about here, but it did help shape me and prepare me for trading. When I was networking, I met a Java developer. And, you know, if you know me and I get a chance to work with a developer, I'm going to take that opportunity. He had a very rough e-discovery tool, and I had envisioned a new process that I wanted to see used with e-discovery in a cloud processing storage environment. So we talked for a while and ended up agreeing to work together on a startup for a company, and he went about working on creating the platform. I started working on writing a business plan and worked on a new website for it. Eventually, we got to the point where we did form a small team, and we applied to the Houston Technology Center for funding. HCC is one of the premier incubators for small businesses in Houston, really in the Southeast region. We went through a formal interview process at HCC and were kind of stunned when they notified us that had been accepted into their technology incubator. We weren't expecting it at all, really. There's only 2 spots offered each time, and it was a huge learning experience for me. HCC referred us to the University of Houston's Small Business Development Program, and they helped us refine our process and plan, which did end up winning 2nd place in HCC's business plan competition. So, and even more amazing, the Bauer School of Business, that's University of Houston's graduate business school, assigned our business plan to some of their graduate students that year to study during their 2nd year. So I can't tell you enough how much I enjoyed going through that experience. It was so personally rewarding for me. And a year later, when my developer started working for Cisco, I took what I learned about process development and I am applying it now to trading. As you know, trading is all about the process, and that is so true. When I started using Bloodhound in 2013, I pretty much knew instantly, as soon as I saw it, that it was going to be the right tool that I wanted to use to create and refine my trading process. It really does beat the hell out of coding, I've got to tell you. By 2014, I did approach Jeremy and Zach about putting together some templates for the Bloodhound Template Marketplace, and I wanted to build the Bloodhound user community. I formed JATS a little bit later that year, and here I am today. I found another door, and I'm doing something that I absolutely love. So let's look at why we're here today, and that is finding the meat of the move, that very profitable middle part of the move that we want to be involved in whenever we can find it. We'll be talking about how I use Confluence with the higher time frame data, fine-tuning the entries on the lower time frame charts, and take a look at 2 new JATS Bloodhound templates that I've created and a new Blackbird Ultimate Strategy. Again, my trade room trial, please register for that for tomorrow and be there bright and early at 7:30 a.m. for non-farm payrolls. I just love this picture. I don't know if any of you know what that is. If you're young, you won't. But that was the Wendy's commercial where they were looking for the beef. So that was cute. Here is my favorite story, Randy McKay from the New Market Wizards. Randy is a big lot currency and grain trader. He had a long, successful trading career. And what stood out for me the most in reading Randy's story was the simplicity of his method. He says that he was successful by exercising discipline and will only trade when his condition is present. Randy is a trend trader, and he feels traders make mistakes mostly by spending too much time trying to pick tops and bottoms. Um, his success, he says, has come by waiting until the move is already underway before he'll ever get into a trade. He calls it catching the easy part, trading the middle of the move. So that's what I want to do. I want to look for that middle part of the move, the meat. And if I can just wait to learn how to identify it, recognize when it's happening, and then jump in at that time, confirm it on a lower time frame chart, I feel like that's going to really be the process that I want to apply to my trading. So, that's all well done and said. How do you actually go about knowing whether price is trading in the middle of the move? Um, well, I have come up with some components on my, daily candlestick that kind of shows me that, and I'll show you that in just a second. It's the progression of a price movement when I apply my filters on the market analyzer and through a series of charts from the 15-minute chart to the weekly chart, um, where I use moving averages, VWAP, Keltner channels, etc., to tell me whether price is trending. So let's take a look at some of those filters on the market analyzer that I apply to allow me a visual glance to know whether price is trending or not. I have broken up this market analyzer in two sections. On the right, I have weekly, daily, 60, 15-minute charts with a trend filter on it. I have synthesized that trend filter, though, in the column on the left, and let me see if I can get my tool working for the highlighter. Here it is. So right here, the higher time frame trend, this is an amalgamation of these categories. It's not an exact replication. I wanted to get a faster trending filter. And for instance, I can look right here, even though I had a range condition, which would signal me that the market might be popping out of a range and I'd want to look at it. I'm going to stay away from that because I don't have a trend condition. So my dashboard shows me quite a bit, and see if I can figure out how to, there we go, that I rely on prior close. I want to be trading in the direction of that prior close, super trend, and the range breakout. I also have a high-low filter that I prefer to trade when the market is moving away from that prior day's high. That's especially with a trending condition. I want to know that that market is available for a trending opportunity. So I have put that on a new synthesized market analyzer called the MACT, which we will show you. So I've taken these columns from my market analyzer and I have condensed this to the MACT market analyzer chart template. And so what I'm looking for with that is a confluence of these higher time frame trending conditions with these chart locations and confluence. So as you know, the standard definition of confluence is a coming together, meeting at a gathering place, and traders think usually of confluence when two or more trading conditions come together or match, and you automatically think of support resistance like a pivot point or a Fibonacci level. Well, I want to ask you to think about higher time frame trend with chart locations like a range breakout or a higher day, higher low. So that's what I think about when my process. So here's my new MACT template, Market Analyzer Chart Template, where I have these components mixed together that you can select higher time frame trend with prior day high. If you see that on your market analyzer and just focus in on taking trades during that time and then going down to a lower chart even to fine tune your entries even further. So I think this is an exciting template for me. Again, I've created a market analyzer for this new MACT template that synthesizes that higher time frame trend, the super trend. I've broken out the prior day high or low, prior day close, and range. And so this was yesterday in the crude market. Today, I saw that it came back some. And be sure and change your ES and all that changed over today to March, but this was yesterday's screenshot. So you can identify confluence of these higher time frame trend conditions with your 15-minute, your range, prior close, and prior day high-low. And then take this down to a lower time frame chart, like your 15-minute, to define to this is the YM. This was a few months ago, and here was, you can take it down to your Winco and then get in once you've identified that this trending condition has existed. And again, for me on my templates, I have this set up a couple of different ways. One with the higher time frame breaking the range of the higher day low. Also, if it's not breaking the higher day, or excuse me, the prior day high, that's what I meant to say. If it's not breaking the prior day high, I have another template solver on here that gives you a permissive to go ahead and take that trade if it's breaking the 15-minute range with the higher time frame trend. So not just every 15-minute range, but 15-minute range with the higher time frame trend also would give me a permissive to enter a trade, because usually that's when it's coming up to those areas. And as you can see here, it just continued to climb on up and out. And that's what we're really looking for, is to identify when these conditions will exist to give us the best opportunity to come in and fine tune our trades. So find it on the market analyzer chart, and then go down to the chart template, confirm it, and then fine tune our entries. So it's really a process as simple as that. And then if we can stick to finding markets, usually something will be trending. You can flip the market analyzer up and down to find these markets that are breaking out and then stick to trading those. I think we'll have a lot better success. I have some other examples for you. This is yesterday in the crude market where it was breaking that higher time frame. This was yesterday's market analyzer also, and range, and that's what it looked like. And then on the lower time frame on my Unirinco, here's my chart template that's set up automatically to enter trades on those pullbacks. So I think having this process in mind, just being able to know that should I want to trade a market that is in the middle of a range, that it's not trending, I can know that if I absolutely have to trade that market, then I'm just going to be scalping inside a previous day's range. Helps tremendously with my plan on what I want to do trading that market. Usually now at this point, I just bypass those markets and I'm just looking for specific things with a higher time frame trend and either a range opportunity or a prior high or low. And here is my new Bloodhound template that I'm so happy with. This is the HighLow 2 Bloodhound template that I have created to really help cement those higher time frame middle of the move opportunities. You can really see inside the pullback, and if you give me just 1 second, please. We can take trades at a couple of points. I have noticed that these pullbacks occur very frequently at standard deviation levels that I have identified on my bands, and I can take the trades in Blackbird once they cross the level and come back in and recross it. So I have set up Blackbird to execute on this yellow midband, and I'm going to update the strategy to also execute on the red midband on a cross recross. And so that is strategy that will execute on the touch. So very happy with that, and that allows you to enter at a more favorable location and get the most out of a trending condition, or at the very least be able to get you a 2 or 3 to 1, much better than entering on the high like we normally do with our normal candlesticks. On our normal candlesticks, we'll wait for that low to break before getting our signal. Now I have a way to identify a locational based strategy, and with minimizing your risk. And let me talk now about some issues with considerations that you should be aware of regarding multi-time frame data. There are some considerations regarding historical prices on other time frames that is covered in the documentation section of the chart that's on the Shark Indicators website. So be sure and check that out whenever you're working with the MACD market analyzer and chart templates, because we are mixing multiple time frames. NinjaTrader approximates historical prices on other time frames other than the default time frame that you need to be aware of. You know, anytime we're crunching um, weekly data on a tick chart, you're going to see a little bit of variance. So what I thought we could do is look through a couple of the charts, or the live charts now, and take a look at what happened today with gold, for instance. Here's today's market analyzer. And like I said, what is so helpful for me about this is the first thing I do is I sort it to see what my winners and losers were or are during the period. And once you get into a trending condition with these futures markets and commodities, they can go for a mile. So like gold just really took off today. And that's here. I've got that put up. Net gas, the ultra bond. Likewise, the EMD, which is the index for the stocks, and crude bounced back from yesterday. But here is the gold chart, and this is the MACD. This is my prior day high-low higher time frame template. So you can see that I've got this set up with the market analyzer categories, and I use it either on a 60-minute chart or a 15-minute chart is what I recommend. And so that will really help solidify you visualizing these opportunities. Here is your range, and you can see price broke through the range and stayed below it the entire session, allowing you to trail. So anytime that you're talking about trends trading, you want to trail. That is absolutely when you want to set up a trailing condition in Blackbird, or use your HighLow 2 template, which is right here for gold. And you can see that I have entries each time price cross back through the super trend. Here it looks like it's moving up and pulling back on a pullback. Obviously sometimes it will just keep going and change direction on you, but when you have a trending condition in your market analyzer like you did today, this is when you want to consider entering the market on these recrosses. So it crosses over and then crosses back down, and you can minimize your risk tremendously by doing this method. Also, you can time this by having a chart also open on your smaller time frame so that you can visualize what it's actually looking like a candle, or even on another chart template, your HighLow 1. Let me pull up a HighLow 1 template so that you can see what that looks like real quick. The HighLow 1, if you're not used to that, is the HighLow Inflections template. I just renamed it HighLow 1 because now I have HighLow 2. So but because you're looking at a different way to visualize these pullbacks, it's nice to have a chart template open that you're used to working with, either the candlestick, 60-minute, 15-minute, or use your standard Winco that you've accustomed to. And here's gold on today's HighLow 1 inflections, and here's the move, and here's your inflection short right there set up for you with the template to take those. So you can take them on the HighLow 1 and then visualize them on the market analyzer, and get a picture of really pushing or adding on better, I think, when you get another opportunity, like when it pulls back. So those are my two templates that I've added to the template package. And if you're not familiar with the JATS complete template package, they're just included in the bundle. They're included, no extra charge. Let me check the questions. Where's the beef? That's funny, Stephen. Hi, Han. Han is asking, so I've refined breakout as opposed to entering on a trend on a pullback and resumption. I'm always going to be entering on a trend, I mean a pullback. I recommend a pullback and not the breakout per se. What I want you to be aware of is when you're in, we're trying to find the meat, the middle of the move. And when the market is going to be moving so that I can get into a trailing condition, a couple of things are going to have to happen for me. It's going to have to be trading below that prior day low, and I want it to be breaking that range on my 15-minute chart. Those are just my prerequisites. So if you look back through a chart at when those conditions set up, you'll see, let me get rid of my lovely drawing, you'll see that this occurs over and over and over in these markets that gives you a trending opportunity for that day or that session. And that's how the markets generally work. They go in these spurts. They'll trend and then they go flat. Then they'll get into a new session and they'll trend and go flat. Here we went into a range, but it did not have my higher time frame filter on it. Here was a prior day, well, there was a prior day high-low range filter. So that's what I'm looking for. That's when I want to find my trending condition. So that's why I've set the template up the way I have, is I don't want to trade this middle part. I don't care. I don't want to be in there. I want to start picking my eyes up. So here we broke out. Here's that first pullback. I'm going to start hitting this market right there. If I'm watching that market now, or if I had been watching the market that day, once it broke my range and I got that pullback, it's the same thing over and over and over. It's the same thing. It's either when I have the when I kept telling y'all when it broke through your volatility level, wait for that first pullback and then take off in the new direction. It's the same thing. It breaks a range, pulls back because this is giving you the impulse move. Then you get your pullback and then wait for it to cross your moving average. And then once it crosses that moving average and takes off with your signal, boom, that's it. That's when you want to just start trailing it. And you can trail it better on the using your super trend or your moving average, however you want to do it, or just drawing your prior highs. Many different ways to trail. I mean, do what your risk profile says is best for you. But there's definitely a difference between trading inside a prior day's range versus taking a trend trailing opportunity. And so for trend trailing opportunities, you're trying to get the maximum amount of that move for the day. And for me, in trying to locate those, I rely heavily on my market analyzer to find a market that seems to be giving me an opportunity for breaking out of these ranges. Now, something I want to mention to you is you could have a condition that's showing you a higher time frame trend, but the net change is going opposite to that. And that does happen from time to time. That's just signaling that the market is retracing or there's a change in trend coming up, because these are on a higher time frame filter. This is your weekly, daily, 60 and 15-minute chart together. This is a faster algorithm. See, the zero means that the market was not in a higher time frame trending state, and we had a net positive change prior day close. This is just a pullback, a retracement. So you want to fade that high back to the middle if that's how you like to trade. So that's how you can set your market up. Okay. But I like to look for these opportunities that I can trail as a trend trader, I want to trail and I want to look for those chances that will give me the best opportunity. So I'm not really trading that breakout. I do like to wait for that pullback. So that was a good question. Thank you so much. And boy, I'm getting some comments now. And thank you, Han, again for that great question. And here's a question. Okay, someone is asking, when I have the Confluence and drop down to the Winco for the entry, is that something you have to set an alert for or execute manually or enter the algo style? You can set NinjaTrader up to signal an alert on these templates, and you can do that through your control panel for alerts. So like if I were to set my template up, or my indicator, and my my Bloodhound, I could set up an alert, and you can also set up an alert through the NinjaTrader control panel. I don't have this set up as an algo. I really want this to be a visualization process right now, because the variance with the multi-timeframe data, it's keeping me right now away from creating an algo with it, because an algo would be using that very low tick data, and I don't want that. I'm sort of waiting to see what it's going to look like in Ninja 8, and I might be able to do it then. But right now, it is a manual process. You visualize on the market analyzer, confirm on your 15-minute or 60-minute chart, and then come down to your lower time frame for entry, or your HighLow 2, whatever one you like to work with. So identify, confirm, and then fine tune. And I think, thank you, Zach, for that question. Let's get to the next question. Gary, I can't tell you how long it would take you to use the strategies and make money. Have no idea. No, I don't know one specific strategy over any other that would work with all futures markets. No, I'm just talking generally. What I generally have found in my empirical experience is, when we're talking about Randy with the Market Wizard, has a 20-year track record, and he said that he has been able to find his success the most by being disciplined and trading a process. And for him, that process is staying away from tops and bottoms. And he wants only to be interested in the market when it's the meat of the move. So that, he doesn't tell us how he found the meat of the move. I'm just saying, I figured out that the best opportunity to find a trending condition for my empirical experiences is when I put this market analyzer together and I took these components of a trending condition and then entered the market at that time in confluence with either the range or the prior close, or both at the same time, and that's when I want to hit the market. So oops, I can't help you there, Gary. Steve is asking what are the settings for my unit Wincos. I have several. This gold one is on a 3.6, and the HighLow 2 is on a 149. So that's a 50 tick range right there. You know, you want to eyeball your markets and see if they flip over on a 50-cent range. Generally, that works for a lot of the markets. Or if you can get by with like a 35-cent range. But you want something that's going to give you enough entries and price is not turning over too much, because you want to be able to get those pullbacks, right? Like right here. And something else I've noticed with this, this really helps cement that when price does make that 50-cent turn, it's going to start trending. So you don't want to be in the middle of the moves. You want to wait until that outside channel sets up, because that really helps you. But I'll go over some of that in more detail tomorrow. You're welcome, Han. Thank you. Wonderful, Zach. Thank you so much for coming today. Stephen, yes, is saying perfectly. Each instrument has its own characteristics and may need strategies. Absolutely. Absolutely. The equity indexes do not trend, for instance. They revert to the mean very rarely. Now, they did have a big trend day the other day, and I'll show you what that looked like. Just the other day, they had a huge move, but it's once in a great moon. I mean, maybe once a month, if that. But still, you can see how this template, like right here, I mean, when you can hit a big trend day on the equity indexes, you know, hello. Yeah, but you're right. Not not very often. Uh, Han is asking if I look for a trend on breakouts of high-low. Is that what I'm doing with range? Wait for the price to be outside of a rolling moving average channel of yesterday's high-low range. I'm actually um, just wanting one of two things with my breakouts. The way I have my band set up is I want to break out either with that higher time frame trend. If I've got the higher time frame trend condition on my market analyzer, like here's the ES, it's all positive, then I want to trade in that direction. And if I see that you're going to be breaking a range, approaching it, that's when I want to get interested. If I'm not above that prior day high, I'm not going to trail it. I'll trade it, but I'm going to be taking profits. So I'm going to take my trade off at that prior day high. I would wait for that to break. And if I get a candle close, strong close break above that prior high, I would get back in on a pullback and then trail. But if I'm below the prior day high, I'm not going to trail. Anything between the prior day high and the prior day low, do not trail. That's where you just want to be trading for profit targets. That's where you're trading to your S1 or your pivot point or your support resistance level. I'm not trailing those. So, good question. Another good question. I would, you know, I usually will trade anything that I think is going to move. I'm sort of like a global macro trader. I pay a lot of attention to the news, and I'll be monitoring very carefully what's on that economic calendar. That's why it's on my website. Um, and I pay attention to this very much because this really signals when these moves occur. I've studied the different economic events and to find out which ones make the markets move and which ones you can ignore. And like tomorrow morning is a fantastic trading opportunity for a trending condition. Um, so, I mean, look at this variance from the previous report to the current forecast. That's huge. That's 61,000. If there's a miss on that, it's going to be a huge opportunity. And likewise, if there's a big miss to the upside, that's going to be another big opportunity. So I've learned what markets pay attention to these non-form events. So this, you would look for your equity indexes tomorrow. The ES, the Euro, not so much gold, but the bonds. Actually put 4 charts up on a 1-minute bar when this report comes out, and be looking at your market analyzer and trade the best one. Find one and see if you can get a trail opportunity, because what we're looking for is something that we can trail. Now, another thing to be considerate of when you're trending, you don't use as much position size as when you're scalping inside of a range. You'll want to lower your position size because you have to leave more wiggle room for those pullbacks. Because if you want to stay in a market, stay in a trade, then you want to give yourself room to allow that trade to breathe. And so you'll want to just stay in and trail it until you get enough, or you see that your momentum is moving in the opposite direction. It's no longer um, continually coming down, it's starting to move back up. So you would get out, but trail it for all you can for that session's opportunity. I don't trade Bitcoin. I think that was wonderful. Whoever got in, if you got in early, but you'd have to have a cast iron stomach for that. I like blockchain, but I do not like Bitcoin. So no, I don't trade it. Yeah, I stay away from it. So that's about all the questions I have. Let me go over the offer that I have. This website back up, I guess I can show us. So thank you again for attending today. I really do appreciate it. I'm very happy with my template package. I didn't really go over that. Let me pull up the offer. Pull this up. There we go. The direction guide Bloodhound template was my first one that I really am proud of. The HighLow inflections Bloodhound template, I've called that the HighLow 1 now. The HighLow 2 Bloodhound template with the Blackbird template. The Bollinger's Band Bloodhound template. The MACT Market Analyzer and Bloodhound template. And the other market analyzer, the trade room is included with it, and the momentum indicators, chart templates, trade plans. If you're new to Bloodhound, you get a little bit of a price reduction through Sunday the 10th. That's good through. And as well as if you're new to Blackbird, there's also a price reduction. There's also a NinjaTrader is offering a lifetime license special through December 15th. So if you're interested in one of these packages, or if you're an existing Bloodhound user and would like my templates, you can order here, come down for the template purchases, register your license, and send that machine ID to me here. There is an installation appointment that needs to be set. It takes about less than half an hour, and you'll be up and running, and you'll get access to the trade rooms at any time that you want to join. I envision trying to, have a Bloodhound user community together. Anyone that has my templates is welcome to join. If you don't have the template package and would just like to join the trade room, you're also welcome to do that. There's a link on my product page to join the trade room. All right, so that is about it for the webinar. Um, are there any other questions? Yeah, open house. Send an email to, let me show that link again. support@jautotradingstrategies.com. Just send me an email. I'll send you out that invitation. And try to be there at by 7:30 because I won't be watching my email after 7:30. I'll probably look at it at 8 and could send you an invitation or a link at 8, but between 7:30 and 8 I'll probably be pretty busy. And that's Central. 7:30 Central, 8:30 Eastern, correct. Correct. Oh, thank you so much, John. I appreciate that. No, I've had the flu. I know I sound horrible, but maybe I should get sick more often. John said it's my best presentation. Thank you so much. And I appreciate this is attributed to Zach and to Ty. They actually worked with me a little bit and helped me with my presentation. I know that I haven't, I needed to improve on that, my presentation skills. I'm more of a technical nerd than a presenter, but thank you so much. That means a lot to me. Awesome. Well, thank you so much, guys. Let's see what time it is. I've got you right on schedule. Ty, is there anything else you want to cover?
No, Julie, like the audience said, great presentation. Can you go ahead and tell me the offer link so I can put it in the chat?
Oh, yes, absolutely. How do I get that to you? Put that in the chat?
Mm-hmm. I can just do it from there.
Okay. Yeah, no, I've refining a process and just deciding, am I going to trade the indexes and recognizing that it is a reversion to the mean market, and how do I approach the market for trading that? Using these templates would also help you to do that. But basically, I am pretty much of the mindset to be a trend trader and trail as much as possible, looking for these outside opportunities whenever I can find them. And there's plenty of markets that are going to be giving us these opportunities that we can find and get involved with. Now, with that said, as you see that this price bar here went all the way from the bottom of the range all the way to the top exact level of the band. So before turning back around and joining the trend, it doesn't mean that you're going to get, you know, not knocked out of your position once in a while. I mean, that's just trading. But once you get knocked out and price turns back around in your direction, that's when you have your lower time frame chart. And if you get knocked out, you just get back in. So But with a trailing philosophy, you give yourself a little bit more wiggle room for those retracements. You're not so tight as you would be intraday. Um, Intraday, you get more wild swings, price action, more of this whipping around, and that's when you do not want to be trend trading. That's when you want to be using tight stops and scalping. So just recognizing where you are and what the goal is will help you tremendously, I think, with your trade plan and your process. So I don't know if that helps. All right. Well, thank you so much, people. I appreciate your kind words, and thank you again for coming. And Jeff, thank you for that tip on that book. I'll definitely check it out. I appreciate that. And we'll talk at you soon. Hope to see you guys tomorrow. Thank you so much.
All right, Julie, thank you again for stopping by and presenting. Anyone
Absolutely.
who tuned in late, keep an eye on your email. We'll be sending the recording out tomorrow morning at the latest, as well as the offer link. Anyone who has questions for Julie, go ahead and send them to support@jautotradingstrategies.com. Any questions for shark indicators specifically, support@sharkindicators.com. All right, traders, have a great week, and we'll see you soon.